Hi, this is Brien Lundin with Gold Newsletter with your Market 1 Minute. I'm here with John Roozendaal of VMS Ventures. John, we're in a market malaise right now that's going on for 2 or 3 years. A lot of companies, the survivors are surviving, but you're doing something a little different. You're not only surviving, but you're prospering. Can you tell me a little bit about where VMS Ventures is right now?
Yeah, VMS Ventures is quite unique in the junior space. We're an explorer that made a discovery which just came into commercial production. And so we're well financed, and we have cash flow coming at a time where everything's on sale. And so we're really poised for growth, and that's going to be, I believe, our story over the next several years is acquisition and development.
Well, a lot of companies right now, because the majors have virtually shut down acquisitions, the M&A activity isn't happening right now. So a lot of the juniors have decided to pursue the production path and bring their projects, especially if there's low capital expense, into production themselves. But that's a long road to hoe for these juniors and very difficult and time consuming. You actually did that, and you're actually going into production right now, which is really a dramatic difference from your peers.
Indeed, we were quite fortunate, and frankly, we had a good partner, and we're in the middle of North America, so we're in a fairly safe jurisdiction. And the other thing about it is there's a sweet spot between pure grassroots exploration and the majors who need quite large deposits to advance, and so there's quite a vacuum, if you will, of very good advanced projects that we can acquire and bring forth and create a tremendous amount of value on it for not a lot of money invested. And
so you're really in the sweet spot here. You have cash flow, positive cash flow.
We will, yeah. We're just paying off our CapEx.
In a buyer's market for other projects. And what's your production profile look like right now?
We just began production. It's a very high-grade deposit. It's averaging just under 4% copper, and so and it was a very low capex because we're using infrastructure already developed in Flin Flon, Manitoba. Okay. So it was a $72 million cost to build it, which is nothing. We owe a third of that. So upon completing our $21 million in capex, we'll be in positive cash flow for the following 4 to 5 years, assuming we don't find more. And of course, we're going to be aggressively looking for more to add to this deposit. We look like we'll make somewhere in the neighborhood of $10 million a year if our pre-feasibility numbers all hold, and frankly they're quite conservative. So even in this lower copper environment, we still look quite robust.
And your market cap right now is only about $35 million?
That's correct, yes. And like I say, we're fairly well financed. We've got $3.5 million in the treasury and about $8 million in North American nickel stock.
It seems to be a very attractive value proposition then.
I believe so.
Oh, great. John, thanks for telling us your story.
Thank you very much for having me. Right on.